Greetings, ladies and gentlemen. Welcome. I am the Crypto Crow, and I'm going to be doing something I've actually done probably a couple of times over the last several years, but I continue getting a lot of the same questions. I continue getting a lot of the what, why, and how about Cardano. And so this video is ultimately going to be, it's probably going to be fairly long, but it will be segmented. There will be jump to links in the description of this video. And ultimately, the idea behind what I'm going to do here is really try to teach you as much as I can to point you in the right direction so that you have a fundamental understanding of what Cardano is as it relates to things like Bitcoin or Ethereum, the differences associated with Cardano, what is the overall goal of this new blockchain, and a lot of different things from markets, the market cycles, understanding what's happening, understanding market dips, the fluctuations of the market. And I'm doing this because even after all the videos I've done, a lot of people, they don't go back, they don't go back a while and they and look up old videos, even in a playlist. I've noticed if I look at the metrics. And so, I have a perfect example of a friend of mine who bought Cardano at 11 cents. And then watched it drop to 3 cents and sold it. And I'm thinking, now his hindsight is, wow, I really wish I would have listened. Now here's the thing. None of this is going to be financial advice. Okay. I'm not a licensed financial advisor. I'm just some guy on the internet that happens to have spent 3 years researching cryptocurrencies, blockchain technology, trading, and everything associated with it. So I have a better idea, but I'm not a prophet. I'm nothing special. I'm not licensed for anything in the financial industry. Okay. So that being said, we're going to move forward here. Now, what we're going to be looking at here, this is coinmarketcap.com. Okay. That's this website behind me. And ultimately what this website does is it gives you, easy access to basically all of the different cryptocurrencies on the market. All right. Now, if you're a newcomer, it's daunting. There's a lot of information here. But ultimately, it's not that complicated. In the top 5, these are ranked by market cap, okay? Market capitalization. So, Bitcoin's market cap, obviously the highest of them all. Ethereum is number 2. Binance Coin, which is an exchange utility token. USD Tether, which is a stable token. It's basically like if you need to trade in and out of a position against the dollar, you can do so with stable tokens. All right. They're basically meant to stay right at about $1, no matter what happens in the market. And then number 5 in the market right now is Cardano with a $34 billion market cap. So pretty high market cap for Cardano, currently trading at $1.06. And you can see here that it's been down 6.4%, over the last 7 days, and then down 4.9% over the last 24 hours. And you go down, you get some basic information. But if you click Cardano on CoinMarketCap, you get a lot more information. Okay. Some of the information that you're going to want is right here. Okay. You've got historical data, news, socials, ratings, analysis, so forth. But market is the tab that shows you all of the different exchanges out there where you can acquire Cardano. Now, as an American, you're going to struggle with the number 1, which is Binance, because Binance no longer allows, US traders. Binance actually created Binance.us, which is apparently the US regulated version of Binance. Binance is probably one of the biggest, best exchanges out there because they list pretty much everything. So if there's something that you want, Binance probably has it. But unfortunately, because you're in the US, if you're in the US, you don't have access to it, which really sucks for a lot of us. It's for our own good. So anyway, the exchange that you're going to be looking at most likely right now is Kraken, because Kraken is actually a Fiat Onramp, all right, which means you can actually go into, you can set up a Kraken account, set up your bank account within it, verify your identification, verify who you are and all of that, and then ultimately you'll be able to buy into Cardano directly from your account. So Kraken is probably going to be one of the easiest places. Now, I see a lot of people, everybody wants to do it the easiest possible way, okay? I explained multiple times. You want to go, you're going to have to buy Bitcoin first, then you're going to have to exchange it for Cardano. And a lot of people are like, can I get it on Coinbase? No, you can't get it on Coinbase yet. Nobody knows why. Nobody knows what the plan is. Nobody understands why Coinbase has been pushing back on it. Nobody has a clue, okay? My idea is Coinbase has recently launched their initial public offering, which has been doing really well, but things are in flux over there. There's a lot of craziness going on associated with their IPO. I believe Cardano is likely, in my opinion, going to be used as my guess is either one, they're suppressing the listing of Cardano in favor of something like Ethereum for a multitude of reasons, hoping that Ethereum can clean up its act, which we're going to get into a little bit in this video. And then potentially list Cardano later. Maybe they never list Cardano at all. They're already set up to list Cardano, as I understand it. That people have found a lot of information associated with them having blockchain availability on that platform, but they just haven't released the token sales yet. So for right now, Kraken is likely going to be one of your best bets, especially if you're in the United States. Setting up the account is very easy. Upload your ID, so forth and so on. I encourage you to take every safety precaution possible. Make sure you use Google two-factor. Use a hardware YubiKey, which you can get for like $20-30 on Amazon. It's a little hardware key. You can stick it on a keychain or a safety deposit box or whatever, depending on how often you use stuff like this. And when you log into your account, you'll have to physically plug this into your USB drive, push a button, and it says, okay, you're the real deal. We'll let you in. Those are very, very useful security measures, especially if you're going to be accumulating large sums of any asset, let alone Cardano. So make sure that you look into those. Never, ever, ever, ever save your password into the browser. Write it down somewhere that's going to be safe, maybe a ledger book, tattoo it on your arm, like whatever you got to do. I did not do that. But you want to make sure that you're using at least, I try to always do like a 15-character password if at all possible, never less than 12. And because there are a lot of statistics associated with brute force hacking passwords and things like that. And you never want to use the same password for your exchange accounts or anything serious. In other words, if you have a password on, like basically any other website, okay, a lot of other websites like, Cafe Press or, whatever random website you're a member of, it's very likely that those sites have been or could be easily hacked or have some sort of data drop or something happen to where your email address and password for that website has been compromised. If you're using the same password across multiple platforms, especially with the same email address, people can go in and start trying that password in your email, and eventually they'll get you, okay? So don't use the same password. If it's difficult for you to unlock your own accounts because of the countermeasures you have in place, it's that much more difficult for somebody to ultimately hack your accounts and steal what you've got. Another note, and we're going to go over this in this video. This is kind of a long introduction to what's coming. You want to use the Daedalus Wallet specifically for your Cardano because you're going to be delegating your Cardano, your ADA, to a staking node to generate passive rewards. We're going to go into that. Some of these exchangers are touting, high returns and this and that. The problem is they get hacked. You don't want to leave. I always tell everybody, you use exchanges like a public bathroom. You go in, you do your business, you get out. You don't sit in the stall and read the wall, okay? It's just not advantageous, we'll say. The same with exchanges. You don't buy your cryptocurrency and just leave it sitting on that exchange. It's just a no-no. You don't want to do it, especially with a proof of stake project like Cardano. All right, now back in December of 2017, this was one of my first videos. I launched this YouTube channel back in November of 2017. And this is December 13th, where I bought my first 15,000 ADA. And this whole video is 18 minutes long. I'm not going to play it, but ultimately this video explains a lot of the reasons why I've chosen Cardano as one of my favorite projects at the time. And since then, I have basically just adopted Cardano like a child, okay? I've named my cat Cardano. I do have a friendly relationship with Charles Hoskinson. I have a very pretty broad and solid understanding as to the technology behind Cardano. We're going to go over a little bit in kind of a easy way to understand, kind of, you know, I'm going to assume you know absolutely nothing about crypto, but you keep hearing about a lot of this stuff, and you just need somebody to kind of point you in the right direction and give you a basic high-level understanding as to what you're potentially investing into and why. So I'm going to try and keep things as simplistic as I can. And then if you want to dive in further, I absolutely encourage you to do so, because when I first got into Cardano, it was basically just a white paper, and it was a token with a busted up wallet and a big roadmap, a lot of milestones that were planning to have been met. Now, before we go into some of the details about Cardano and other things, what you need to understand is originally there was Bitcoin, okay? Bitcoin came first. It basically introduced blockchain technology to the world. And, you know, its origin is unknown. Nobody knows. I have my theories. Other people have their theories. But it was initially adopted by, you know, the cyberpunk community. You know, there are jokes about the $40 million pizza. Some of these old school cyberpunks on Bitcoin Talk forums, you know, one gentleman basically said, hey, I don't have any cash, but I've got some Bitcoin. If anybody wants to order a couple pizzas for me, have them delivered, I'll send you the Bitcoin. Well, the Bitcoin that it took to make good on that like $40 order or whatever is worth like tens of millions of dollars today. All right. And I think that was back in 2011. All right. So, you know, the idea of the technology was still new, and nobody really understood the potential big value. Okay. And but some did. And so some people accumulated. They didn't trade it. They just accumulated over time. They mined it with their CPUs. They did all these different things to accumulate Bitcoin and held them. Now, some of those people are some of the richest people in the world. And so moving forward, that was first generation blockchain technology. There wasn't anything flashy about it other than being able to send value from one area to another point anywhere in the world in virtually seconds with very, very inexpensive transaction fees, okay? And all that information, all those transactions are stored on an immutable blockchain that can't be changed, okay? So every time transactions go through, they create new blocks. That's what mining is. Mining in a proof of work algorithm like Bitcoin and currently Ethereum is, you know, these people are using either their CPU or their GPU power to process all these transactions while the machines are solving cryptographic problems, ultimately putting those machines to work, utilizing the resources of those machines, and they're being rewarded in block rewards. That goes into like the halving, okay? Every 4 years on Bitcoin, there's a halving, which basically means every 4 years, half as many Bitcoin are being awarded as block rewards than the previous 4 years, which ultimately increases demand while lowering the available supply, which further pushes the market up. Okay, that's why everybody talks about the halving, the halving cycles and so forth. It's also a big reason why, you know, when people first hear about Bitcoin, they think, oh, isn't that blockchain, that crypto thing that, you know, went up to $20,000 and then crashed like by 90%? Isn't that a scam? No, what people don't realize is that before it went up to $20,000, it was around $600 at the low of the previous cycle. And it went up, I think it was 6,430 something odd percent before it dropped 85%, 86% in its bear cycle. Okay, which is what we concluded several months back, all the way down to a low of around $4,000 in December of I think it was 2018, if I'm not mistaken, if not 2019. So that's a market cycle, and those of us who have been around crypto for a while understand the ebbs and flows of these cycles. And those who came before us, even, me having started in 2017, I didn't fully understand a lot of this stuff back then either, but those who had came prior to me did. And so we're seeing people who are exiting these big giant positions when everything is just shooting up to the moon, and none of us are really understanding why people are liquidating, their assets. Even project founders, like the gentleman who founded Litecoin basically announced, I just liquidated all of my Litecoin holdings. And it ultimately was the peak of the market. And everybody thought, oh my gosh, he's betraying his people and this and that. No, he just understood what was happening better than most of us. So now so many of us are in this part of the cycle. We're in a bull cycle right now. Here on 3/12/2021, we are in a bull cycle. And so that's why you're going to start seeing so many more people FOMO into blockchain technology and cryptocurrencies, because they're getting a hint as to what's happening and what's going on. Now, back here on December 13th, ADA was only 13 cents. Within 60 days of this video, Cardano went from 13 cents to $1.33. Okay, that was the peak of its market cycle right there, from 13 cents to $1.33, and then it came all the way back down. And when it came down, much like Bitcoin, Ethereum, and everything else, I think Ethereum bottomed out somewhere around 60 something bucks, maybe $80. Cardano came all the way down to 2 cents. And so the psychology of the market cycle is such that people go through a variety of different emotions, okay? And I'm going to go through some of those now, because you really do need to understand a lot of this stuff so that you're basically well armed and you don't become such easily weak hands, as we call them in investing. People who buy something expecting it to go up instantly, and the second it starts to come down a bit at all for any reason whatsoever, you sell at a loss, and then you kind of screw yourself. But if you understand a lot of the ebbs and flows of the market, it should help you. So the market cycles are basically, starting out down at the bottom here, you see disbelief, you move into hope. A recovery is possible. Optimism. This rally is real, right? Everybody sees the price action going up, and then you see belief. Time to get fully invested. This is when FOMO really starts to kick in. This is around where we are now, I would guess, in the current cycle. I mean, we're getting close to this belief. Like, everybody's like, all right, we're in, we're buying in, we're accumulating more. We believe the prices are going up, and we're going to do really well. Then you have thrill. Oh shit, I will buy more. My friends have to buy. This is where everybody you're starting to see news articles all over the place talking about how high can we go? Where are we going to go? Bitcoin to 150,000, Bitcoin to 200,000. And Bitcoin front runs the market, because what happens is people are buying Bitcoin first to get into other positions. And oftentimes Bitcoin is what people hear about before anything else. So they buy Bitcoin. Then when they're researching some of this other stuff, they see some of these other smaller cap cryptocurrencies, and they start putting their profit. So if they bought $10,000 worth of Bitcoin, because you don't have to buy just one, or you don't have to buy a full Bitcoin, you could buy $10 worth of a Bitcoin. It's fractional up to like 100 million. Okay. So doesn't matter what your budget, you can always accumulate Bitcoin. But people buy that first. So let's say I put $10,000 into a Bitcoin, and then it goes up and I make a $10,000 profit. Now what I bought's worth 20 grand. Well, often what happens is people will either pull out the original 10 grand, let the 10 grand in profit ride, and they'll start distributing it to altcoins that are smaller cap, they're smaller market cap coins. and then ride those profits even further. So if you see in the previous cycles, Bitcoin peaks first, then when its market dominance starts to fall, you see the market dominance of altcoins start to rise, because then they have their blow off tops generally after Bitcoin does. So once Bitcoin has peaked, it starts to fall, that profit goes into the altcoins, they have their peak, and then down we go in the rest of the bear market cycle. But after that, you've got euphoria. I'm a genius, I'm going to buy a Lambo. That's the peak of the market. Now, if you don't catch the peak of the market because you're not paying attention or you're not really fully aware of what's going on, you can end up in a bad pickle. Because once the peak of the market hits, it drops very, very quickly. Generally speaking, oftentimes, from the final peak of the market, you've got about maybe 10 days, if you're very lucky. I'm pretty sure that, in a general market peak, the bulk of the pump is about 60 days. You've got about 2 months out of years, ultimately, to really generate the most bang for your buck. Now, a lot of us, analysts and speculators and educators and so forth, believe that this market cycle peak is more likely going to start around September. It could conclude in late September or October. It could even potentially move into November. Nobody really knows 100%, and that's just a fact. There are a lot of indicators that are going to give us an idea as to where we are, and I'm going to show you a couple of those in just a minute. But ultimately, once that starts going down, we might get another pump in which we're in complacency. Now, this is the actual last market cycle right here. I mean, this is pretty much it. This starts down here in November. You can't see it. But right around here, we were in December. And yeah, so, and then like, this is the peak of 2017 into 2018 and so forth. So, but that's generally the market cycle. It ebbs and flows, and every time it goes up higher. Now, here's another look at the 4-year cycle. Generally, what you're looking at is 2-year bull, 2-year bear. Okay. And, you've got your bull cycle up, your parabolic run, your blow off top, and then you've got your peak, and then it starts to come down, and then it starts the cycle all over again. Generally, these 4-year cycles begin at the next halving period of Bitcoin. So when supply is cut in half, demand continues to rise through adoption and so forth and so on, and it just starts sending the cycles up. So this is basically what these 4-year cycles look like. Okay. So now that you kind of have at least hopefully a better understanding as to the market cycles, the halving and all of that, we're going to go into some differences here. Now we're talking about proof of work versus proof of stake. This is a comparison of 2 blockchain consensus algorithms. Now, ultimately, I already explained proof of work for the most part already. Proof of work being you've got these machines, they're basically utilizing their resources to create new assets, do different things, and that's it. I mean, there's nothing. It uses a lot of power, a lot of electricity, so forth and so on. Proof of stake, on the other hand, is different. Proof of stake transactions in the Bitcoin blockchain are grouped in a memory pool called mempool, while a block is created every 10 minutes. Every transaction in mempool needs verification, and miners do it. The transaction verification process is called mining. So this is ultimately like what proof of work does. Now, if we go down to proof of stake, how is a proof of stake algorithm different? In case of a proof of stake algorithm, a set of nodes decide to stake their own cryptocurrencies for the transaction validation. They are called stakers. The larger amount of a stake and the longer the duration of the stake, the better the chances are that the staker gets a transaction validation responsibility. Ultimately saying, you never really know which nodes are going to be responsible for validating the particular blocks that are coming up within the chain. And so it's a measurement, it's a calculation of how much of the asset you hold, how long you've held it, and different variables associated with that. And that is ultimately, some of it's luck. There's like a luck equation, and like the Cardano blockchain, there are a lot of different things. So, and you can see some of this. For example, this is adapools.org. Okay, this is actually my own personal node. I'm currently at 87% saturation, which is right about where I want it. At one point, we were much higher than that. So you don't want to get too oversaturated. But you can see the metrics for my personal node, the Crow node. And let's see here. You can see my lifetime luck is 94%. Blockchain 5. Estimated blocks in the whole epoch coming up is 48. So that's pretty good. My node's pretty solid. And we've got a second node, which is Crow 2 that we recently launched. And it's currently ramping up. Now, if we want to look at some of the other statistics here, what you can see is live stake. Out of the total current supply of Cardano, 22.88 billion ADA are being staked on nodes right now, which makes up 71.6% of the total supply. Why does that matter? Well, that matters because as Cardano reaches new milestones in its technological development, its protocol development, and all that fun stuff, more people are accumulating it over time. As more people accumulate Cardano, they stake it on these nodes, of which there are over like 1,600 now. It is officially like the most decentralized blockchain on all interwebs at this point. And with that, there's less available supply on exchanges, which means you've got less supply, growing demand, which ultimately pushes the price up further, okay? And that's what many of us Cardano holders believe is going to continue to happen. So when you look at those statistics, you can tell there's a lot of demand and it's growing, and a lot of people are delegating. The people that aren't delegating are likely trying to trade it manually on exchanges to try and sell at new highs, and then accumulate after pullbacks and just keep accumulating more over time rather than just buying it, supporting the network itself, delegating it, and generating a passive reward. Now, passive reward, what is that? How does that work? So this is actually on Cardano.org. This is the calculator. I'll have this link in the description below. And you can basically say, if I want to delegate my stake, how much would I earn? You know, if you had 10,000 ADA, then this is roughly what you would generate in a yield. You'd get about 460 Cardano a year, roughly 4.6%. Okay. So, and if you look at like the different node statistics, you can see current ROA is 5.534%. ROA in the lifetime is about 5%. 5% is about average. So on my node, and there are other nodes that have similar, some of them even have better statistics, honestly. But, you know, we don't know who a lot of these people are. It's the only reason why my node does so well is because everybody knows me. But anyway, you know, they're averaging it out to 4.6% delegation reward, so 460. So you'd actually get a little bit more than that on an annual basis. That's based off of just starting off with 10,000. Let's say you bought 100,000, which right now would be over $100,000 to buy in. But if you got in at 2 cents or 11 cents or whatever, it'd be a lot cheaper, obviously. But that 100,000 would get you close to 5,000 ADA every year as a passive delegation reward. For a lot of people, the delegation rewards on the Cardano blockchain are becoming passive income streams. Some people are honestly able to live off of buying Cardano at the lows, delegating them on a node, and then basically living off the rewards. Okay, so keep that in mind, because this is a very legitimate thing that's happening right now. So now what we're going to be talking about now, you've got a little bit of the differences between proof of stake, proof of work. You can dive deeper into that. Cardano is a proof of stake. Obviously, it uses a lot less resources, has a lot of power, has a lot of different things it can do. Now, what did Ethereum do that Bitcoin didn't? Ethereum introduced smart contracts. All right. And that's what made Ethereum so popular. And that's one of the big reasons why Ethereum is still so popular today. It's because through smart contracts, there are so many different use cases associated with, you know, basically what kinds of things can be done. The higher the number of use cases, and the higher the number of different companies and people are utilizing your blockchain, you ultimately drive up adoption, you drive up demand for the cryptocurrency, and there are more transaction fees, ultimately that result in higher payouts for miners that support the decentralization of the blockchain, so forth and so on. Okay. So some of these use cases are digital identity, trade finance, financial security, government, insurance, escrow, mortgage, trading activity, clinical trials, supply chain management, That's just to name 12, okay? There are an endless number of use cases that you can utilize smart contracts for, including gaming. There are a lot of new blockchain games coming out. Doesn't talk about a lot of it here, but there are a lot of gambling sites that are on blockchain. And things like NFTs or non-fungible tokens, which can be books or artworks or things. We're seeing the NFT market absolutely blow up right now. I'm getting ready to launch a series on Cardano myself that I'm going to unveil soon. It's going to blow everybody away. It's actually super amazing. And that's what we're seeing. But the problem is, like something like DeFi or decentralized finance, okay? You can look that up. That's not what this video is about. But decentralized finance has been the big boom for Ethereum. The problem is that through such extravagant use cases, I mean, like, you know, CryptoKitties was one of the first protocols, or the first dApps or whatever on Ethereum that ultimately sent Ethereum to its knees. The blockchain congestion was insane. The exchange transaction fees were insane. And that was just basically for like a little collectible card NFT thing where people can collect pictures of little cartoon cats that they own that would be rare, and they could resell them at profit and so forth and so on. That's ultimately the root of the NFT market right now. And it's still going extremely strong today. Look up Beeple, Beeple. Look up what his latest work was sold for. Millions, all right? Now, the problem with Ethereum is it's kind of slow. It's not very scalable because it's proof of work, which proof of work really kind of limits your scalability. Interoperability is a kind of an issue. Interoperability is basically the ability for one blockchain to work fluidly with other blockchains. Think of it like maybe like being able to translate English to Spanish or French to German, right? You've got all of these different blockchains out there, and they want to be able to work together. And interoperability is what ultimately enables these blockchains to do that. Ethereum doesn't really have a lot of that going for it yet. There are a lot of issues. The transaction fees on Ethereum are astronomical. They kind of go up and they go down. But you can send $5 in Ethereum at one point. It could cost you $40 just to send the transaction. I mean, it's kind of crazy. And they're working on Ethereum 2.0, which is supposed to address a lot of these issues, as well as convert Ethereum from proof of work to proof of stake, which is what Cardano's been built on fundamentally from the beginning anyway. So they're trying to answer a lot of these questions, but they're just not being answered in a timely way. And a lot of it is still kind of messy. And there's a lot of concern about the Ethereum blockchain. From a speculative perspective, Ethereum is like the grand poobah of all smart contracts. It is to smart contracts what Bitcoin is to blockchain for most people. So it's getting a lot of institutional investment, institutional interest, and a lot of speculation. It's risen from 80 cents all the way, or $80, all the way up to where it is right now. I think it's like $1,800 today. And it's probably going to go up much, much higher over the next 5-6 months or more. So why ADA? Why Cardano? But ultimately, Charles Hoskinson, the founder of IOHK, or CEO of IOHK, and ultimately the founder of Cardano, put together some of the best minds all over the place for the development of Cardano, which was ultimately what he chose to do after being co-founder of Ethereum with Vitalik Buterin and Gavin Wood. Now, Gavin Wood broke off and started something called Polkadot, which is also a very good project, but it's much more niche focused. It's much more focused on DeFi, like on finance and just kind of like this niche market, whereas Cardano is something that's being developed with interoperability, scalability, speed, low transaction fees, you know, multi-asset tokens that work in a much different way than a lot of other blockchains with, you know, meta tagging and all sorts of different fun stuff, ultimately creating something that could very easily become the foundation for an entire country, which is one of their newly released use cases in a deal with Ethiopia that they're still looking to announce officially. But you're talking about millions of people potentially using the blockchain for everything that they do. And that's just one step. That's just one thing against all of the other use cases currently available out there. A lot of people are looking at Cardano as the, how do you say, like where all the freaking Ethereum refugees are basically eagerly anticipating being able to go, because you're going to be able to migrate all of your Ethereum applications directly to Cardano. Boom, done. So you can instantly avoid, if you have a really wildly powerful DeFi application on Ethereum, you'll be able to migrate it right over to Cardano and eliminate all of the Ethereum transaction fees that are ultimately killing a lot of good projects out there. There aren't enough people willing to forego all of these insanely high fees to maintain use of a particular protocol. So even something like Celsius Network, who, is founded by Alex Mashinsky, the inventor of voice over IP. I consider him a friend of mine. He's a very good guy, very honest guy, very driven guy, and his whole thing is unbank yourself. He's tired of the banks taking everybody's money, so he created this application through Celsius Network that enables people to loan and borrow with or against their cryptocurrency. And I think they pay like 80% of all the interest generated from these loans back to the people that are storing and staking their cryptocurrency within the application. It's brilliant. It's been blowing up. It's one of the biggest apps like it out there, but they originally had been built on Ethereum. And I've had Alex Mashinsky and Charles Hoskinson both on my channel live, and Alex said, we're going to Cardano as soon as it's ready. Let's get it done. He spent $500,000, I think, either a month or a year. I don't remember. I think it was a year, basically eating these Ethereum transaction fees so the users don't have to take that hit. Absolutely amazing man, and they've come further since then, because I know they've been working with Cardano. The fact of the matter is Cardano addresses so many issues that are presented by Ethereum. And it's not that I'm an Ethereum hater, but when we're talking about, you've got some people that they're just speculators. They don't necessarily care so much about the technology behind something, and they just want to buy something that's going to go up. They don't really care what it is. I really was introduced to a lot of this stuff from an investment perspective, but I got pulled in deep by the technology itself. And the more I understood it and the more I understand it, the more broad of a scope I can see this reaching and ultimately changing the world as we know it. So now that you kind of understand, I mean, there are differences in Cardano, but you understand the market cycles. You understand there are little ebbs and flows. The prices go up and go down drastically. Sometimes Bitcoin can go up by $5,000 in an afternoon and then drop $9 the next day. It's just what happens. People have to get used to this kind of thing until volatility starts to wane, which is happening now, quite frankly. As more institutions are buying into the space, we're seeing a lot of this kind of stuff happen where the volatility is going down. Now, some of you guys are saying, what? And I had this as a reminder. Some of you guys are basically saying, well, how do we know? Like once we've bought, how do we know what's going to happen? What's coming? So this is a Bitcoin stock to flow model. This was put out by a gentleman by the name of Plan B on Twitter. Very, very intelligent individual out of the UK. And this is basically showing Bitcoin's, this is all predetermined, ultimately, these hard lines. These are all basically based off of the stock to flow calculations of how much Bitcoin is in the market compared to the demand, compared to like the price action, and how much is sitting idle and all that kind of stuff. Basically taking supply and demand of Bitcoin, where it's going, and then calculating in halving, days until the next halving. So as the colors change, we know we're getting just that much closer to the next halving. And generally, this is the peak of each market. So this is where this bar, this line here, is where the price is basically expected to be based off of the actual calculations, right? But what happens in the market cycle, as we saw in the previous graph? Well, we end up in pure euphoria. We end up in a position to where, like, right around here is typically where everybody's telling all their friends. Like by this point, if you've gotten into the cryptocurrency space, a couple months ago, you've already made a bunch of money, right? You bought into something, it's gone up for the past 2 months, you made some money, now you're telling everyone you know. And it creates this spiraling web effect that just continues to grow. And that is how we get far and above the actual stock to flow calculation of the Bitcoin price, which we all know spills into everything else over time. So when do we know when it's going to happen? When do we know that the peak is in? there are a lot of different indicators out there, but ultimately I've been looking at the pi cycle top indicator. It's accurately predicted the peak of every market so far. And you can see basically when we cross up over, I'll zoom in on just these so we can get a better idea. So when this orange 111 DMA, this moving average, crosses up over the green, the 350 DMA, that's generally the indication that we've peaked, that is the peak of the Bitcoin market price. Doesn't mean it's the peak of the altcoins, but it does mean generally that it's the peak of Bitcoin. And you can see when we did this, when we crossed over right here, that was it. I mean, that was December 17th. Bitcoin hit about $19,640. All right, that was the peak of the market. Well, here we are again. We've actually got, let's zoom in just on that. We've still got plenty of room here. It looks tight, and it is getting tight, but right now, Bitcoin's price is at $57,847. And we still have plenty of room to go. I believe we're going to break over 100, 150,000, maybe even more before we peak out, which I expect to start seeing formulating around September. And so that's basically, you know, when I expect to start seeing this bull market come to a conclusion. Now, the flip side to that also is institutions. What role are the institutions going to be playing in the market moving forward? And right now they're just accumulating, and they're working on adding the different number of products available to, you know, retail investors and so forth, to be able to accumulate or buy blockchain assets without physically having to handle the individual wallets and all of the, you know, gobbledygook associated with cryptocurrencies right now. But the people that are taking advantage of some of these things, like Grayscale's fund, like the GBTC, so forth and so on, they're paying insanely high premiums. You could ultimately be paying 3 times the current market price of a digital asset through some of these services, just because you don't have to touch it or deal with it. You're paying insanely high premiums. So, you know, if you're saying I want 1 Ethereum, well, you might pay $6,000 just to get your hands on that 1 Ethereum because maybe you plan on holding it long term. It's kind of nuts, but there's actually a huge market for it because, I mean, there's tens of millions of dollars going into it. So, IOHK, this is the Daedalus Wallet. You know, again, there'll be a link in the description below, but this is what I would highly recommend somebody use to store their ADA. It makes everything easy. You download the wallet, you open it up, you'll create your wallet, you're gonna get all of your seed keys and all of that, write them down cleanly, write them down on good paper, don't just scribble it on a napkin. You're gonna be really sorry you did that in the future. And ultimately, the process of buying Cardano and putting it on a wallet and all that, maybe it takes you an hour, but that's not the end of the world. Okay, that 1 hour is not a big deal at all. You can do that 1 hour could mean tens of thousands of dollars potentially in profitability for you over whether it's 6 months or 6 years. Now, another thing that I want to basically point out to you as a Cardano holder is there are going to be a lot of videos out there. You know, Cardano to $50, Cardano to $100, so forth and so on. It's bullshit. Okay, a lot of these guys, they're just capitalizing on the clickbait. You know, they want to drive traffic to their videos, and you know, listen, some of these guys get a lot of views, right? So you're thinking, oh, this guy knows his stuff. No, there's a science to it. Some of us play into it, some of us don't. You know, people who really focus on YouTube for revenue and their way of life and all of that, then that's ultimately what they do. And I'm not saying that there's even necessarily anything wrong with it. I'm just saying that you can't really buy into some of it. You know, I don't see much higher than an $8 Cardano by the peak of this market. Now, anything could happen, okay? It could maybe someday, somehow, or not someday, but by the peak of the market, hit maybe $10. Maybe it does go up more. From what I'm seeing, anything is truly possible. But when I've done my own market capitalization calculations on ADA against Bitcoin's dominance in the market and so forth and so on, I came up with $8, and every time I do a different calculation, I end up about the same place. So something tells me that by the peak of this market, we're going to be around somewhere around $7.80 $8, and I'm good with that. You know, it's trading at just over $1 right now. So even if it just hit $8, it's like an 8x return on an investment in 6 months. That's not too shabby if I say so myself. But there's also no guarantee that it's even going to get to that high. It might not go up at all from here. I doubt that, but I gotta say it. If we look at, and this will be the last bit of this as we hit 45 minutes. If we look at Bitcoin or Cardano's price, Cardano is the blue and white here. The purple line is actually Ethereum. The purple line is actually Ethereum in the last bull cycle. Do you see similarities? Do you see any similarities? I bet you do. It's virtually identical. I think there are reasons for this. You know, I believe that Cardano is ultimately replacing where Ethereum was in the previous cycle, in terms of interest and adoption and speculation and things. And the fact of the matter is Cardano hasn't even fully launched its smart contract protocols yet. Goguen is not even out yet. I expect to see that very soon. And once we do see that, we're going to start seeing a lot more adoption. Now, if you look at the price action from here, if it were to continue following this trend, you know, we could see a 75 cent, 60 to 75 cent Cardano before we start to pump up. Here's the thing. We're currently in March. You know, for some people that are doing their taxes, they're at H&R Block and they're doing their thing, and you know, they might liquidate some of their cryptocurrency holdings to pay the tax bill or whatever, right? So we see some of that pretty much every year in every bull market. We see March being kind of a lull, and then we start to pull up. Now, if Cardano were to follow in Ethereum's footsteps, as it has basically so far this year, this is what I expect to see. This is the kind of activity I expect to see. And if I move forward into the parabolic run up, into the peak of the market, look where we ended up. We ended up with a $7.33 ADA. All I did was literally copy the bars from Ethereum's chart. If you look back in my playlist, my Cardano playlist, I explain why I calculated a $7.85 ADA price by the peak of this market. I did this in a completely different way with completely different, everything was completely different, and I still ended up around the same place. Any way I look at it, that's just where the cookie crumbles for me. That's where, you know, that's what I think is going to happen. It doesn't mean it's going to happen. It's just what I'm expecting to see, and I'm kind of counting on it to some degree. You know, and at the same time, a final note, this video is primarily about Cardano and just kind of trying to help you understand the markets and the cycles and what Bitcoin is, Ethereum is, Cardano, yada, yada. But a lot of the cryptocurrency assets in the top 100 are going to continue probably rising. I mean, for the most part, I expect to see significant growth in this market over the next 6 months, into September, October, maybe even November. So you can pretty much throw a dart. But the question isn't about what's going to go up. It's a question of what's going to go up faster and better. And by better, I mean the projects or the cryptocurrencies that they don't have solid use case. Their technology is not very sound. It's a joke of a coin or joke of a project or whatever. Generally, those go up and they'll get pumped, but they also pump down. They fall down just as fast as they went up. Whereas fundamentally sound projects like Cardano generally rise. When they dip, it's not that bad, and they continue moving forward because people are buying, they're accumulating, and they're holding because they believe no matter what, even if they miss the peak of the market for whatever reason, they've got to hold through the next market. Cardano could see, you know, 25, 35, $50 by the peak of the next bull market cycle in 2024, 2025. So if you end up holding long term, well, then, you know, depending on where you are, you could be lowering your capital gains tax. So in one way or another, it's still likely much better than trying to buy it, trade it, you know, play around with it, or just buy completely crappy coins, because it's super cheap and you can get a whole bunch of it for a few bucks and expecting to generate a huge return on it, because chances are a lot of those coins that you're buying for a fraction of a penny today because you expect to make a fortune on tomorrow, you're going to miss the pump anyway, because those are controlled by groups you're not in. So just keep that in mind when you're moving forward. Hopefully this video helps you. Hopefully it answers a lot of questions for you. Other questions you have, answer or ask me in the comments below. I'm happy to help when I have time. Be wary though that there are bots. There are people that run bots pretending to be me. If I mention WhatsApp or if I mention the name of anybody who's like helping me with trades, it's garbage, it's scam, stay away. You don't want to touch it. Just, you know, thumbs down those comments. And I generally like to go through every so often and try and hide them or get rid of them or remove them. So, but until next time, guys, hopefully this was helpful. Crow your coins, and I'll see you again very soon.